So come back to again technical part. TMP is the trade vesting is the business of buying and selling financial instrument. For any business, we need business partners. We cannot do business in the air. So these are our business partners. First is stock exchange, that are the National Stock Exchange, Bombay Stock Exchange, and MCX. MCX is for gold trading, gold future trading. NSE for the all other trading. NSE and BSE are both, but NSE is bigger, volume is high, so we prefer to select NSE. But there is no harm in BSE as well. And for the shares, for NSE it is for derivative it is predominantly NSE, National Stock Exchange. Both are located in Mumbai, and I'm also located in Mumbai. And one of the comment which posted by Nilesh Parikh, that 80% of the trading is done by the Kailash Plaza traders, and luckily my office is in Kailash Plaza, right? So let's go to the business partner. Next category of business partner is depositories. What are depositories? Those are NSDL or CDSL. Where do you deposit the money? Right in the chat box. If you have money, where do you deposit? You deposit in the bank. But if you have shares in a DMAT format, where do you deposit? That is depositories, CDSL and NSDL. So when after the session is over, next 1 week, read about when the website of CDSL, what they do, read about broker, read about stock exchange. They have their own website. And then there is broker, those are called as depository participant. So I'll explain depository in a very simple understanding way. So let's say imagine depository is a warehouse where they have lot of compartment, or we can say account of different shareholders, thousands and millions. Okay, these are depositories. There is another entity called as depository participant. They are called as broker. So these are the depository participant. DPID means depository participant. Those are Zerodha, Grow, Angel, Sharekhan, these are all agent. Even ICICI Bank, HDFC, they are also broker, depository participant. They have tie-up with the CDSL. There is a stock market, NSE, BSE. So this broker or depository participant buy shares, do the transaction on our behalf in the share market, and send report to the CDSL, and then settlement happen at the CDSL level only, or NSDL. That means this is a shareholder A, and this is the B. So when A sells share to the B, what happens? This share will be transferred from this account to this account. If B sells B to C, they will transfer from this account to this account. That means those DMAT format shares just get transferred from one account to other account. That's it. It's very simple. The way you you transfer money from one account to other account by GPay. Let's say a patient comes to you and pay 500 rupees to your account, and then next day you go for the some taxi driver, you pay 300 to him. So what is happening, that you are just transferring money from one account to other account, that is a bank account. So CDSL or NSDL depository are like banks of storing, depositing securities. I word use the security. So security means any tradable financial instrument. There is another word used by the broker. It is called a script. It is not script. It is a script. It is also security. I am using financial instrument because it becomes self-explanatory. Self-explanatory. Financial instrument means security, script, governance. Security can be bond, government securities. Usually, derivative is not called as security. So, broadest term will be the script or financial instrument. Security is limited, but they are used interchangeably. So, script, security, financial instrument, one and sell, those are stored into the deposit. There are two deposits. And agents do this all. We need bank because we transfer funds from our bank account. This is a bank where you deposit to broker, and broker due to the stock exchange where it is transferred to some other bank. And broker gets the shares which are deposited into DMAT account. When you sell, so broker takes money shares from the demat account and sell, take the money in his account and can transfer back. So the flow of money is from bank, broker to stock exchange. In a reverse order, when you place the sell order, brokers take the shares from demat, sell to the stock market, take the money, refund. So these are the partners. These are the close partner. Some banks issue a 3-in-1 account, so because that means bank itself is a bank as well as demat holder and stock trading account. Okay, Zerodha provides you trading account and demat account. Okay, so three entities. What are the three entities involved in the transaction? Bank for the money transfer, broker, and deposit or demat account. These three entities are involved in the transaction. Now you might see why I wrote this, because these are the people who control the market. So these are the bosses. Government of India, the RBI, control the money market. SEBI control the capital market. Government of India is control entire uh, economy, and state government. Each state government is helping to do the business. So since these are the helping us, they are not there to free to charity नहीं So they charge us, and this is, if you do any transaction, this is how it looks. Broker will charge brokerage, although this is mentioning zero broker because for shares they are not charging. Then security transaction tax, this goes to government of India. Commodity transaction tax, it goes to government of India. For gold future or the trading done on MCX, they charge commodity transaction tax. You can see that how much the percentage, 0.1% on shares and buy and sell. Then these are the transactions, these are the stock exchange. So NSE takes this amount of charge. NSE takes this. Government of India takes GST on the brokerage. Okay. SEBI take the charge 10 rupees per crore. For their expenses, stamp duty goes to the state government. So everyone is there to help you in exchange of cost. Now, in the next coming week, this is your assignment to find out all these charges from your broker. The assignment basis, and you already know it. How much is the broker? These are the standard. You can find on Google. So this is standard. This is standard. This is standard. This is standard. So except brokerage, these are standard. Stamp duty is different for each state. If you are demat account in Tamil Nadu, stamp duty might be different from the Mumbai area. Okay. So because this goes to the state government, when you buy the real estate, how much stamp duty you pay? Let's say you buy a flat, right now. How much stamp duty? Let's say you buy a flat of 1 crore. How much is stamp duty? Stamp duty is the tax basically goes to the state government. Okay. So the way we have stamp duty in the real estate, here there's a charge. So some, that is what I am saying. Different number. Some is saying 6%, some is saying 11%, 8%. See, this is why 6.7%. Each state government has a different stamp duty. Here, stamp duty is much less as compared to real estate. So this is another advantage of investing in stock market, because stamp duty is extremely high in the real estate. Minimum 5%. It is a huge amount. Here it is very small amount, 0.01%. But you should know transaction charges, because this is the pain point of traders. If you see the SEBI report, maximum people lose money because of cost. What they do continuously buy, sell, churning, and their costs are huge. TMT graduates are very smart. They keep their cost low. So it is always less than 1%. So if you calculate this comes around 1.5% or sometimes less than. So if you do one trade and if you are paying 0.5% every time, and if you do 10 stop loss trade, you are losing 5% in just cost only. Even if you make 5% profit, your entire profit will get wiped out by this. So what we do, we keep this cost low. This is the first principle of business. Cost should be low. So we have to keep cost low. In order to that, we need a broker who has minimal brokerage. Banks and so-called service brokers are notoriously charging 1%, 2%. It is not good. We need a broker who provide good platform and don't provide any services, because broker services are not good. They will make you a intraday trader because their income is based on brokerage. So they will see that you do a lot of transaction. So your first goal is to reduce the cost. Now this assignment you have to do yourself, search on Google what are the cost with your broker. If you are using any other broker who is charging a lot of, you have to stick to any broker in top 10. We are not associated with any broker, it is your choice, so don't connect Zerodha with us, we have nothing to do. Preferably Zerodha is we recommend because this is top number one and it provides GTT facility, good trade facility. That means even if you are on vacation, your order gets executed. You can place order in the night anytime, 10 o'clock, 11 o'clock, at 3 o'clock, you are monitoring the patient, you are placing the orders, so then GTT facility. But this is an exercise because these are necessary evils. Expenses are there because these are the business partner. So after discussing business partner, let's go to the some products, detailed products which I mentioned that I have discussed bonds and sovereign gold bonds because you are going to buy. So what are the debt products? Mentioned tradable, non-tradable. Non-tradable we are not going to discuss that because we are in the buying and selling into secondary market. So tradable debt products. What are those? Bonds, corporate bonds, bonds by the banks, government security, exchange traded funds, gilt fund. So these gilt funds are mutual funds. We buy gilt funds as well. We buy arbitrage fund. And this arbitrage fund is not a debt product for the taxation. It is considered as equity product, but the behavior or dynamic, pharmacodynamic means price behavior is like debt product. So debt product price behavior is like this. If they grow like this. Steady. 6%, 7% growth every year steady. This is the pharmacodynamics or price behavior of debt products. Equity products and gold price behavior is like this. Right? I had shown you a video of momentum curve. I will show sometimes. So, no, today we are not going to discuss arbitrage fund. Today we will just discuss this thing, government security and bonds. Detailed discussion is going on continuously, so don't worry. Understand the fundamentals of debt products. Let's go to the National Stock Exchange. I will show live demo. Today you are going to visit this National Stock Exchange website and just do surfing. What are the things given here? In the beginning, you go to the invest here and read the product segments here. Some information. What are the product available at the NSE? So read this product segment. You go down here. You click equity product, derivative products. We buy it. You read this. Okay, this is your assignment. Start making notes because this is the market where we are going to work. So visit this website and I'm going to show this is the market data. The debt product, if you click on the fixed income and debt product market, you will get the bonds. So here is the bonds. Bonds means non-government security, which includes the corporate as well as other entities, like let's say Chola, LT Finance and all the things. We don't invest in the bonds, at least at the beginning, don't invest. We invest into the government sector. So GSEC, click on GSEC, you'll get the all government security listed. I posted one of the document government security channel to see the interest payment date, face value, and other things. So next week you are going to buy government security. If you click on the series, you will get two symbols. One is treasury bill, TB. That is treasury bill. Write down treasury bills are the bills or government bonds which has less than 1 year maturity. So you will find 364 days, but not 365. See that? I will explain this treasury bill first. How to read the this stock exchange. So you see the treasury bill. First three numbers represent how many days bill is there. Now it might be listed long back, but the starting. Second is this 182 days. Thereafter there are six digits. So it is a date of maturity. In DD it is day, DDMMYY. It's MM actually. So my question to you, what does this mean? 365. That is, it might be listed 1 month ago. But you see the after date. So what is the maturity of this second bond? Write in the chat box. Date. Date, write it. It is written over here. DDMMY, 6 digit, first two digit represent date of expiry. Second two digit represent month. The third is the year. This is TB, treasury bill. Are we going to buy? Yes, you are going to buy. The price, I'll explain you. First, let me understand. Okay. TB is a series. ICN is a International Security Index number. This is a code number. Don't go into the detail because it has a unique number. This is a patient. We have the MRN number, unique number. The way the security is also a unique number. Face value. Okay, so take the notebook and write down the meaning of face value. Face value is the value written on the bond or shares as well. Face value is the value you get back at the time of redemption. Third line, face value is used to calculate the interest payment, coupon payment. Correct? Face value is also used to calculate the dividend for the shares. So Reliance shares will have face value of 10 rupees. So Reliance declared 500% dividend. Means how much dividend? I mentioned 4 points. Face value is mentioned on the shares of bond. Face value is the money you get and the return in case of bonds. Face value is used to calculate the interest rate. If face value of Reliance is 4%, 10 rupees, and Motabai declares 500% dividend. How much dividend? Per share. Calculator मैंने बोला था. It's a 50 rupees. 10 rupees का 500% 50 rupees. Now I say if there is a security, let me show it. 7.95. Face value is 100 rupees. How much interest you will get? This is the next question. 7.95 percentage. So face value I explained 3 points. Let's go back to the T-bill first. In T-bill, government does not pay any interest because this is just 1 year maturity. Then how do we make the profit? Because the face value is 100 rupees, which you are getting back at the end of maturity. But the price of your bill is issued less than the face value. Suppose if you tomorrow you buy this bond bill at 93.5 rupees. This is the let's say current market price. And face value you will get 100 rupees after this is in February, so it's like almost 1 year. You can see. No, this is 2nd January. 2nd January. That means 11 months. So you buy at 93.5 rupees. You get 100 rupees in 11 months. Calculate the return. Now forget calculate the return. Return calculate करूँगा. So this is your buying price. So how to calculate return? I should start very basics. So selling price minus buying price divided by buying price multiplied by 100. This is the return. करो calculate करो और बता दो. Selling price is 100 rupees. When you say redemption means you are getting 100 rupees back. So 100 rupees minus buying price is 93.5 divided by 93.5. multiply the ID. There is 5 minutes break for me. Then, because admin teams wants to introduce themselves, then we'll continue the calculation.
Hello, everybody. My name is Natasha Surani, and I'm Chief Administrator at WealthCon, and I'm associated with it from last 4 years, and I'm managing and helping at logistics. Okay, and next we have Mona Lisa Madam.
Good afternoon, one and all. Myself, Mona Lisa Thackeray, the tech admin of WealthCom. I have done my master's in computer application and I am a software and application analyst at WealthCom. It was my pleasure to add the finest brains of India and overseas in WealthCom. All the technical problems regarding app, website, and channels will be handled by me. Thank you for waiting patiently to get added and approved in channels. And once again, welcome to WealthCon. Thank you.
This is Dr. Shweta here, Chief Admin of WealthCon, and you will see me quite often during your lectures. And if you have any problems, you can always send a message on Telegram. The 9999 number belongs to us.
Respected dear doctors, my name is Arushi and I'm your coordinator, so I'll be calling you often. You can reach out to me if there's any issue. Thank you so much and welcome to WealthCon.
Good afternoon, everyone. So I'm Anali Gurnani and I'm working as a TMP coordinator. And for any problem, you can reach out to me as well. And by within few days, you will get to know that who is your coordinator. So you can always reach out to me if you need any help. And in past few days, we have already had the communication. Thank you so much. And yes, of course, welcome to WealthCon.
Hello, everyone. Sorry for not owning my video. I am facing some internet bandwidth issues with the Wi-Fi, but yes, I welcome you all to the WealthCon. Hope you have a great experience. I'm lucky to have a conversation with everyone, and yes, you might have spoken to me very often. But Deepika ma'am has called me. We can reach out to Deepika ma'am if there is any issue. So yes, welcome to the family. All the best.
Good morning, doctors. This is Charchaka. I'm the JMP coordinator and I shall welcome you all. Thank you for your time.
Hello, respected doctors. I'm Vaishnavi Zambre. I'm your TMP coordinator. And you can reach out to me in case of any questions or inquiries. Thank you so much. Have a nice day.
Thank you very much. And I suppose senior guys groups are waiting for the introduction of Priyanka, but probably they will have to wait for some more time. They must be curiously waiting when she will appear. Okay, let's go back to again discussion with, because these are the people they were supposed to meet you very often. So we were again at the T-bill, treasury bill are sold at discounted. It is also called as discount bond because those are sold below face value. Okay, and we don't get any interest. We buy at lower price and we redeem at that face value. So our return is approximately we get in the bank FDs. Okay, it is more than the bank FD. So it means if you want to do a bank FD for 3-4 months, this treasury bill is much better than the FD. It's very simple to understand. There is no interest. There is not much calculation. Nowadays, stock exchange is allowing this T-bill to get the for the pledging that we can use afterwards. So for short-term parking of the funds, T-bill is one of the alternative to that. Now don't ask which is better. It is more or less same, small here and there. Next is government security. The difference between T-bill and government security is that T-bill is less than 1 year, government security is more than 1 year, which is usually 10 years, 20 years, etc. If you see the government security is, I'll explain how to read that government security symbol. So first 3 digits represent the coupon payment. I'll explain coupon payment as well. Second is GSEC and there is year on expiry. Now here it is a 7.95 GS 2023. It means coupon payment is 7.95% of the face value, and this will mature in 2032. Exact date I posted date in the channel, you find out exact date, but this is the year. Third one, you write the explanation of third bond symbol explanation. If you can see the third one in the list, 1, 2, 3, and write down the explanation. So this is for you, right? I'm reading. किसका आ रहा है, किसका नहीं है. So, it's a coupon in payment, that is interest rate on the face value. It's 7.19 government security 2060. 2060. It means if you want to invest lump sum and get interest rate every year till you check out 2060, I'm sure that almost 99% of us will check out before 2060. Check out planet, tuck up, because now 40 years maximum. Doctor anyway don't live more than the public. So, but if you want to invest for retirement one time, that is this. Then there is 36 wala bhi hai. Okay. Then there is ICM, that is security index number, that is unique. Here is again face value. Face value is 100 rupees. Now you see the prices are more than the face values. Can anyone write why price? No, face value is 100 rupees. That means you'll get 100 rupees at the maturity, and every year you'll get, in this case, 7.95 interest rate. So this is a coupon rate. Why it is called coupon? Because in a previous generation, the bond used to have small coupon. Go to the bank, give the coupon and get the amount. So that is coupon rate. Coupon rate is 7.95. And if you buy this bond at 105 rupees, how much return you are getting? Because this is at higher level. Right? Then why it is higher? Suppose you buy at 105, and how much you are getting? 7.95 rupees you are getting for buying this. So if this is the buying price, how much percent return you are getting, or how much percentage of interest you are getting? Find out. See, for this is amount you are investing, okay, and this amount you are getting. So calculate percentage. See, if you can't calculate percentage, then you have to think that you need to know lot. Because if you can't calculate the return, you are not an investor, you are a speculator, sattebaz. You think to calculate karna aana hai, without which you can't. Okay, so let's go to the third standard. इसे बता देते सर. 105.6 rupees को 7.595 आता है. तो 100 rupees को percentage wise कितना आएगा? X amount. Then you do the cross multiplication. So this and this, and find it out. 8.5 wrong है. जब तक correct नहीं आएगा मेरे पे, तो calculate आना ही चाहिए. How much you are getting? You are calculating the return, because these are the points you are going to divide by 105, 105.6 multiplied by. So you are getting 7.2%. Why it is more than 100? Because the bank interest rate is lesser than this. Current bank interest rate is less than 7.95. That's the reason this bond price is going up. So you are going to buy at least one bond tomorrow or day after tomorrow. You are going to buy at least one PV. Okay. So these are the face value, open, high, low, LTP. These are the prices in that particular day. For example, this. To find out liquidity, whether they are available, you find out the volume. So you have to find this, select this bond which has high volume. Because if there are no buyer and seller, then you cannot really buy. So if you click here, which are the high volume bond. So this is, there is a lot of volume. So you can buy this 2036. Okay, price is around 1.1103. Okay, I'll explain why the prices are different for each. So let's come to the fundamentals of bond market. Why you need to understand bond market? Because this is related to stock. Money, as I said, there is always party going on. If people are running away from the stock market, where are they going? So this 200 trillion rupee big fund manager, they cannot withdraw money and keep at the home, not even a bank. They have to invest somewhere else. That's the reason bond market, stock market, gold market, these are money, commodity or currency. People are just running somewhere. So you have to follow the big people, and that's where we should not waste our time to understand why market is falling. We have to understand where is money going and where money. So let's come to the bond market. Okay, first is the issuer. Right, the issuer is the entity which issue the bond. What are those? Babuji, bank, business entity, the individual or buyer. Face value. I explained the face value. Coupon rate. Coupon rate is the payment rate based on the interest, based on the face value. If coupon rate is 7.95 and face value is 100 rupees, so it means this is amount or interest amount. It will be coupon payment is the total payment. Okay, if face value is 1,000 rupees, sometimes face value is 1,000 rupees, sometimes it is 10,000 rupees. If face value is the 10,000 rupees, coupon rate is 7.95. How much money you will get? This is in percentage, so you will get 79.5 because face value is here now 1,000 rupees. If face value is 10,000 rupees, there are some bonds which 10,000 as well. So you will get 795 rupees. So this is coupon payment. Coupon payment and coupon rate is different. Coupon rate is in percentage. Coupon payment is total payment on one bond. If face value is 100 rupees, you will get only 7.9. If it is 1,000 rupees, you will get 79. If you face value is 10,000 rupees, you will get 7.9. So coupon rate and coupon payment are different. Coupon rate is in percentage. Coupon payment is total. So face value will be coupon payment and coupon rate will be. Then there is something called as bond price or maturity. Maturity is the date of expiry. Okay, these are fixed. Face value is fixed, coupon payment is fixed, then maturity is fixed. For the primary bond price, for the primary investor, it doesn't matter. But if you have to sell it, then you have to sell at whichever price is in market. So there is called as bond price, and bond price fluctuates every day. So what are the factors which decide the bond price? For example, here you'll see here bond price is 102, face value is subtle same. Then why? Here 105, here is 100. So apart from demand supply, that is one factor, it is always there. For any prices, demand supply is there. What are the other factors? Other factors are the maturity. So maturity and coupon payment. So that decide bond price. I'll explain one concept how bond prices move based on the market interest rate. Suppose J and V. This is the J. This is the Reliance. And this is Tata. J bought one bond of face value 100 rupees. His coupon payment is 8 rupees. This for 1 year. Okay, from the Reliance. So Jay bought a bond of Reliance, face value 100 rupees, coupon rate 8 rupees. So after 1 year, he will get him 108 rupees. This is the Viru of Shoru. Viru had a plan to sell this after 1 year and he intended that he will get 108 rupees. But after 6 months, Basanti said, no, I want my money back. Otherwise, you will drink alcohol and spend. So give me money back. So there is a big fight. So Viru want to sell this back to the Gawa people. Now, at that time, the SBI interest rate is giving 10 rupees on 100 rupees. So Gawale had option to buy either SBI or Viru. Why will Gawale buy Viru's bond at 110 rupees? If they have option to buy 110 rupees. Because say Gawale will say that we are getting 10 rupees benefit and here we are giving 8 rupees benefit. We are not interested. So Viru says, okay, what I will do, I will, instead of 100 rupees, give me 98 rupees. थोड़ा discount पे देते हैं. Give me 98 rupees. So at the end of the year, you will get 108 rupees. So your profit will be exactly 10 rupees. So I am selling my bond at discount. So you get this money. Now why Viru is ready to sell his bond at discount? Because when we bought, market interest rate was 8%, but now it is increased by 10 rupees. So he has to sell his bond at discount because market rate is going up. Mukran bhai. Mukran sir bought a bond at 100 rupees. SGD 7.95. At that time, SBI rate was also 7.95. After 6 months, SBI increased to 9.95 and he wanted to sell this bond. Who is going to buy? No one is going to buy. So what you will say, I will reduce my price, I will make it 98 rupees, give me 98 rupees, so you will get automatically 10 rupees profit. So his bond price is gone down because market interest rate is increased. Now, what is the market interest rate? Market interest rate is the alternative. For example, FD rate, government security rate, market interest rate. If market interest rate goes up, existing bond prices goes down. If market interest rate goes down, bond prices goes up. So here is the practical example. This 7.95, whenever it was issued, we don't know exact time, but that time market interest rate was 7.5. This bond. Whenever it was issued, market interest rate was 7.95. But now market interest rate is gone down, so this price is okay. So whenever you see that bond price is higher than face value, it means its coupon rate might be higher than the existing market. So that's the reason it is high. So bond prices are inversely proportional to interest rate, market interest rate. There is another concept. Now you will have to read a little bit about these things. It is difficult to understand at the beginning, but I'll give you practical tips to remember this. So bond price is the market price. It is not face value. Suppose if you buy this 26 bond at 102 rupees, there are so many bonds, then which bonds we have to buy? You have to make decision. So this, if you have many options which we have to buy, in that case there is another concept called as yield to maturity. I'm just giving a simplified count. It's a very complicated topic. I'm just clearing your fundas. Thereafter you can go to higher discussion. So yield to maturity is right there. Yield to maturity is the calculated value of interest rate or yield, calculated value of interest. If you keep on reinvesting in the same bond, the same coupon rate and hold till maturity. This YTM calculation is very complicated form. You don't have to go into that detail. Google calculator is available, you can directly calculate YTM to compare. So the YTM is used for the comparison of bonds. So YTM gives an answer which bond to buy. Higher the YTM, that is, this YTM is dependent upon maturity and coupon rate, face value, bond, all values. So if you search on Google YTM calculator, you can directly do the YTM calculator as well, yield to maturity. See, this calculations are complicated. You really don't have to go immediately, but you can start using, finding out. So here is the calculator section Google. Let's calculate one. Okay, let's say maturity. I'm just keeping this coupon rate into this one. So let's take this 2036 coupon rate is 7454. So 36 makes 36 7.45 semi-annual face value maturity and call price is how much is the price bond price 103. Okay, see 100, I will put this 100 into 103 here. And just calculate here. You get the YTM. Okay, so this is yield or this is YTM, and you can compare which gives better YTM. There is something called as dirty price here. Okay, dirty price, clean price. Dirty price means suppose interest payment is semi-annual. That means twice a year. Suppose January and July is the payment, interest payment. Okay, and if you buy the bond in July, it means this bond has accumulated some interest, and if interest is accumulated, it is called a dirty price. Why it is called dirty, I don't know. It is a face value plus some interest accumulated, and as soon as interest is paid, next day price is clean price. That means no interest. So remember, dirty price is accumulated interest, and clean price means just no interest accumulated. So these terms you will have to read to understand it. It is really fun because if you know this all things, you will be able to discuss confidently with your CA banker. If you go for loan and you say that, if you use the high-fi words like government security, accrued interest, cost of customer acquisition, bond price, modified duration, etc. interest rate कम कर देगा ये इसको समझ लो, ठीक है. So learn it. It's very interesting. We are going to use practical. ये theory नहीं है. You are going to buy sector government sector. And answers are given by the maturity, return rate, maturity. Okay. So this is related to the debt product. Okay. Usually market rate we compare with the SBI rate. So if you see the SBI rate, this I posted here, SBI rate, just for comparison. When we say market rate means SBI rate or RBI rate. Okay, various rates are recommended. So let's finish one more thing. Equity, these are the products which we are going to discuss in the next live session, in which exchange traded funds, stocks, direct mutual funds, and instruments are like this. I'll finish one more thing, sovereign gold bond. I posted one of the article and FAQs in the channel. How many of you read the FAQs posted from the article right in the chat? So this is we are going discussing in the government security bonds. So SGB is also issued by the RBI. So I thought I'll discuss it. If you don't learn anything from the TMP, still at least you start investing in SGB, sovereign gold bond. Start investing in government security. Start investing into the exchange traded fund. Start doing the swing trading, which is a child's play. Even if you don't understand complicated, but start doing immediately. Government security you have to buy next week only. At least one TB, one GSEC, and one SGB. So target it. SGB is the very interesting product. Why interesting? I'll explain it. And why it is one of the, we always hear that government is sending freebies to the poor people, right? SGB is an investment where the government is giving freebies, middle class. Why? It is issued by the RBI as a bond. It tracks the price of the international market, international board. So it is issued by RBI and government. That means it is a secured bond. It gives you 2.5% interest rate in per year on the face value. This is taxable as per your slab rate. If you hold till redemption, it is tax free. Tax free. This is one asset which is tax free, and you can sell on the secondary market as well. You can pledge it to get the collateral. So this is a Sone Pe Suhaga. What we do the derivative trading. It's very interesting. When you connect the dot, you see और यहाँ से पैसे से पैसा मिल रहा है. Derivative trading. We buy the sovereign gold, we pledge it, and from that pledge margin we do derivative. Money and money and money and money. SGB gives you 2.5% interest rate, which is tax free. It is due appreciation. The way gold coin it will give similarly, so it is tax free. So this is, I guess, it should be number one product for all of you. If you don't invest in stock market, that's okay. But start investing in SGB. You can invest 4 kg per head per year. That means 4 kg is around 2.5 crores per year. And this will beat, suppose by and large gold gives you 8%, 9% return. The historical return is 8%. If you buy this gold coin, it is 6 to 8%. If it gives 8%, it is tax free. And you are getting 2.5, even after tax 2%. So 10% tax free return from SGB without using brain. This is just without brain. If you use little brain and use this for derivative trading, additionally 10-12% if you get, even if you get 10% additionally, by using this capital, you can have a great capital gains. Okay, so I will show how to buy SGB in live market by sending the assignment video. Now few notes, few important instructions do not run up. G10 formation will start in next week. We have collected G10 format, G10 form, admin will put them all in together. Thereafter, remaining single scholar will be put randomly. There is no choice to select guides and senior guides. There is choice to only select the scholars which you are doing it. Okay, guides, senior guides will be assigned randomly. Application will be functional in next week. It is available only for the scholars and senior guides and guides. Application is not available for personal guide. Please do not send request to admin and in post group. We have made it clearly that personal guide will have 3 access. One is live session, and there is assignment videos in Telegram channel and LTP sessions. That's it. Unnecessary people trying to make things complicated. Here I made it clear. It is not possible to make everything same. It is not possible to give access of all privileges for the scholars to the personal guide. We have kept it separately and we have made it clearly. Do not request. Scholars will get the PMP app access. Videos will be shared there. Assignment videos will be available on the TMP app. Till app is functional. It is actually functional, but we have not uploaded the information of the scholars in this. The app you can download after 3 days. We post information in the scholars channel. Or you can reset your password. Once if you go today, list is not updated. Mona will explain what to do in a set. But don't try today. In application assignment videos there we will conduct the assessment. We'll post some assessment in the lab. This is the and doubt. You might have written the doubts. We will post a Google form today. You write all doubts. We'll try to answer those doubts either videos or text format. All your doubts will be created always solved either via Google form or whenever there is a G10 formation after a week. Most of the doubts will be solved there. All your doubts will be solved. You just have to be little patient. Most important announcement: do not post doubts in WP because it creates a lot of FOMO, that is fear of missing opportunity, to other people. And do not post very good session, thank you Ram sir, in the WPI because it unnecessarily creates FOMO. Okay, thank you messages we will take at the end of course. Your feedbacks or experience, do not post now. Okay, Shanti se pado. If you create lot of noise, then you will get lot of messages on personal wall. Okay, from unwanted messages. So do not post any message in the WPI except DMAT related queries. You can ask what DMAT related process, that's open for discussion. But TAP related questions like bond and all the things, do not post. Admin will delete those messages. They will give a reminder, 1 or twice reminder. They will show you yellow card, red card, and sometimes block. Okay. So this admin gang is very ruthless. They don't consider who you are. They will delete you. And there are 20-30 admins. Sometimes even I don't know who has blocked whom. उनको research करना पड़ता है कि किसने किसको block किया. So let me clear. PMP apps will be details will be posted. Don't start sending messages. App is not functional. Whenever functional, we will message. G10 will start in a week. Everything will be posted on channel. You will get the call from Priyanka, and we instructed that keep calling till you receive it. If you don't want, you can opt out and say don't call me. We will remove your number, but then you will miss a lot. Probably it is not good behavior. We have started sending SMS as well. Telegram channel is the main for the communication. To next week onwards, TMP coordinators will start calling directly to you. They are human now. We got there because this is not recorded call. They will ask you a follow-up, what are your any problem, any issue, they will try to fix it on their layer or else central admin team. Doubts I explain and start reading, start taking 30 minutes from your routine schedule because probably after 3 months you will learn a lot that you will be more competent. Okay, thank you very much. Sweta madam, you want to give some instruction? Thank you very much. Feel me. Yeah, let's like it looks like बच्चा है just like के बिना मैं खत्म नहीं होता just 1 second this is take home message है तो first take home message खत्म कर okay so this I will explain you so this is take home message you can learn finance manage your own you can 100% even writing that it is possible to learn finance hundreds and thousands of people are doing it so you can also do it. Keep long-term goal. Profit is a byproduct of knowledge and efforts. No tips studying diversity skills. Action gets result. Knowledge without action is entertainment. Study regularly and feel million. Okay. Thank you very much.
Thank you so much, Dr. Ram, for this wonderful session. And on behalf of Team WealthCon, thank you all scholars for patiently attending. Thank you, Natasha, Mona Lisa, and all our TMP coordinators. Once again, kindly note that sharing the TMP content outside of this platform is strictly prohibited. We will see you all on our next session on 11th of Feb. Thank you. Here's me signing off, Dr. Shweta Mukherjee. Thank you.